Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Saturday, the 24th of February, 2007, and we're going to take a look at some stocks for trading on Monday. I've got shares of Garmin on the screen right now, and GRMN just recently broke out to new highs after reporting better than expected earnings. The company cleared this prior level of resistance here, this high, where it actually failed, but then we had the fundamental event that really brought the buyers out, and now it looks like this big volume tells me that I think the stock can continue to move higher. If we look at a weekly time frame, you can see that, well, maybe not. Let's take a look at the monthly. Well, my longer term charts don't want to pull up, but this is an all-time high for the stock. So there is no real potential for resistance as far as where the stock's traded and other people looking to take their break even or whatever. So what we want to do in this stock, if we look at the 10-minute time frame now, is buy it on some strength above $57.70. If we can get above $57.70, that's where we want to purchase it. We'll put our stop down close to this 5-day moving average. We'll put it down at about $57.08. So that's 62 cents of risk. And as far as an upside target goes, I think it's should be pretty easy for the stock to make it up to about $60 a share. So that'd be $2.30 of potential upside for a risk of looking like 62 cents in shares of Garmin. I mentioned this stock about a week and a half ago. It's called On2 Technologies, symbol ONT. And it's low price, but it is pretty liquid here. If you look at the average daily volume of the last 20 days, it's 1.3 million shares. So we can see that not only does it have a high average daily volume, but it'll give us enough liquidity so we can trade enough shares to make it worth our while. But you can look and see that the volume pattern has been very bullish, that when the stock rises, it's been rising on heavy volume. And relative to that, the pullbacks and have been, well, first of all, the pullbacks have been shallow, which is nice to see, but they've also been on diminishing volume. So relative to the buying pressure, we're seeing very little pressure coming in when the sellers take control temporarily. But it did clear this resistance level, which looks like now it's support. We've got that 10-day rising up through the 20, and also 50-day moving average rising again. So you can look at it and say the short-term, intermediate, and longer-term trends on the daily time frame are higher. So if we look at a weekly time frame, unfortunately that works for this one because it's a little more relevant than Garmin, you can see that the stock has had some trouble in this area for the last couple of years. And looking at a monthly time frame, if I change the scaling here, what we can start to see is that this level looks like if this can be taken out in here, then I think you're probably going to see the stock up near about $1.60 or so. So our target's going to be $1.50 to $1.60. If it just reaches the $1.50 level, though, I think it makes sense from a risk-reward standpoint to buy the stock above $1.28. We'd then put our stop at $1.22. So that would give us 6 cents of risk. And if we were to use our conservative low end of the target range of $1.50, that would be 6 cents of risk for 22 cents of upside in shares of ONT. One more long stock is Brooks Automation, symbol BRKS. You see this stock broke out on big volume as well. That resistance here did hold as support, and the stock's been creeping higher. Friday, well, let's take a look at the weekly time frame first to see where we think the stock can head up to. I think a minimum of $17 a share. So let's say our target is $17 a share. Now we had a strong day on Friday where it cleared this resistance early on in the morning. It kind of fell back in and did a whole bunch of nothing, but then we can see that late in the day something appears to have happened here that got the buyers excited again. It ran up very quickly 50 cents and then pulled back down. So what I want to do is buy the stock above $16.20 a share. We could put our stop down at $16.08 because if it keeps going down, then I think it's failed. So we only really need to risk about 20 cents in here. I'm sorry, 12 cents. And our upside target would be $17 a share. So that's a nice risk reward in there as well. Lufkin, LUFK, this is called Lufkin Industries. Lufkin Industries broke down on heavy volume. I have no idea what happened here, but it gapped lower and then continued lower that day. Since then, we've been seeing the stock rising, but the volume has been diminishing, meaning that the buyers aren't that aggressive in here. And now we've got this prior level of support, which tends to act as resistance. Doesn't mean it will, but it does make sense to look for a potential short sale in this area. If we look at the weekly time frame, it might be making a really big top in here too. So let's just take a look at the 10-minute time frame first. Or actually, let's look at the 5-minute time frame. What I want to see the stock do is rally up to a minimum of $56.50 first. If it can get up to $56.50, then what we want to do is we want to look to sell short as the stock breaks down. We want to sell short on weakness, not on strength. We want momentum in our favor. So we want to sell it short below 56.15, but only if it can first trade at least as high as 56.50. We could then set our stop at 56.55. That would give us 40 cents of risk, and I think the stock has the potential to make it down to at least this level in here, $55 a share again. So that'd be 40 cents of risk for about $1.15 of potential profit in LUFK.